So today we're going to be going over the ICT breaker. Now in high time frame consolidations like we're trading inside of right now, this is going to be one of the best PD arrays to look for in price, and I'm about to show you why. But first we're going to go over how to identify a breaker block. So looking at this chart here, we have a institutional reference point on a high time frame, right? This can come in form of liquidity, an order block, or a fair value gap. You just have to have a high time frame point of reference where you're targeting, right? And then you're going to be watching price action, and you're going to watch it do something like this. It's going to stop just short of it, have a small retracement, and then go through that area before coming out of it, and eventually taking out this short-term low right here. Now, when the short-term low is traded back to, we expect that to act as our breaker. Once it trades away, that breaker is confirmed, and you can look for your 2022 model and your silver bullet, right? Now, where are we looking in this swing low? We're going to be looking at the range's lowest down closed candle, right? And that's going to be easier to see when we're actually going into the charts looking at an example. But for now, we're going to pretend that there is a down closed candle right here, which is the lowest in the range before this move through our high time frame institutional reference point, right? This is how markets top. Now, alternatively, you could see a move ensue like this. You stop short, retrace, push through, and get displacement out. Now, you're going to be looking for a fair value gap and a breaker. This is how you actually trade off of a breaker block. This is what ICT calls a unicorn setup, right? We trade back to the short-term low, and then we continue our move lower. Again, assuming your breaker block is right here, and you can pair this with any fair value gap that might be in this range. So now we're going to go back into the charts and actually show you what this looks like in live price action. So here is a great example. This is the hourly chart of the NASDAQ, and we're going to draw out our level of liquidity right here. You can see we're about to run through it, and we're going to see if we stop short, which we do. Now we're looking for a move through it and displacement lower. That's exactly what we get. So now we're looking at this short-term low created right here, identifying the lowest down closed candle in this range, right? This would be the highest, this would be the lowest. We're going to mark this out as our bearish breaker block. So now we have identified where our breaker is. Now, in order to take a trade off of this, we need to identify another PD array, right? We have a fair value gap right here. Now, this is what ICT calls his unicorn setup. Now, the entry we're going to be looking for is going to be inside of this fair value gap once we touch this breaker. Our stop loss is simply going to be above the breaker block. This is how I always play unicorn setups. So now we're going to continue playing out this price action and see if we make that return to our breaker fair value gap combination. And right about there, looks like we're about to get into it. And right there is where we want to sell short, right? So I'll take a paper trade, for example. And what are we targeting here? Well, when we have a breaker, that's usually where we've put in our high or where we've put in our low. That's going to be the change in the state of delivery where you're looking for price to deliver to the opposite area of liquidity. In this case, we have a clear and obvious area of liquidity resting right here, right? We have all of these relative equal lows, so this is what we're going to be targeting off of this unicorn setup. So if we continue to play this out, I'll put it on 10 so it goes faster. We can anticipate, there's your 2022 model, there's your silver bullet, and this is the liquidity that we're aiming for right there, right? So we came through our liquidity, we'd be taking our profits out once we come through. Now we're going to be looking at this swing high right here at the range's highest up closed candle, right? Clearly, we have this candle right here, which is going to act as our breaker. And we just touched our breaker again. What do we have in confluence with our breaker? We have a fair value gap resting right here. This is, again, another unicorn setup. So where do you want to buy? You want to buy right when it touches the breaker inside of the fair value gap, right? So we'd be buying this, and our stop loss would simply be below the breaker, and our take profit would be the opposing liquidity. And now we are back in real time, so the trade closed itself, but you get the gist of what I'm saying, right? You see how we have a fair value gap paired with a breaker. We touch it, you sell that short, you target opposing liquidity, right? You can add on here as your 2022 model. You can add in right here right? We have this order block. There's your silver bullet. And what is this? High, low, higher high. So what does that form? That forms a bearish breaker. Where's your bearish breaker? Right here. There is your bearish breaker. Notice we don't have a fair value gap, so it's not a high probability precision entry, right? Like we have up here and like we have all the way over here. But nevertheless, it acts as a breaker. It propels price to its final destination below the sell side liquidity. Now, you don't have to look for these on high time frames, although they're extraordinarily useful for your intraday trading. If you want to use these intraday, you simply look for the exact same thing. I guarantee you we can zoom into any of these areas in price action and find a smaller fractal breaker. So now we're going to combine this breaker block with different forms of entry models, right? So you could use this with a power of 3 setup. You could use this with a market maker model. You could use this with a 2022 model. You could use this with essentially anything, because what we're trying to do is we're trying to catch an expansive move, right? The bearish breaker is the point where the state of delivery has been changed. We switch from a buy program to a sell program, or from a sell program to a buy program, right? That's that point of activation in the algorithm. So that's where we want to be getting into our trades, because we know our stop loss is going to be protected. So this is that original hourly breaker, right? This is this section of price action right here. We ran through our area of liquidity, our high time frame institutional reference point. So now we're going to be dropping time frames to a 5-minute, returning to this area, and looking for our setup. So now we're zoomed into where this breaker forms. We're going to remove all the drawings on the chart and start fresh, right? So we know our area of liquidity is up here. We stop short, come through it, and displace lower. Now what time of day is this? Well, you can see we had a news event at 8:30, and the market opens here at 9:30. We have our Judah swing, which typically ends around 10 o'clock. And then we have our 10 to 10:30 silver bullet window right here. And then we go 30 minutes into the future, and we have our first 90-minute cycle of the day, right? 9:30 to 11 a.m. Now, some of you may already know where I'm going with this, but this is a power of 3 setup, right? We have our accumulation. We have our manipulation higher right here. And then we're going to have our leg of distribution. So if you play power of 3 setups, this would be where you're looking for your breaker. We have a high, low, higher high, displacement. Now this is the lowest down close candle in that range, right? So we're going to extend that out to the right. So we've identified our area of accumulation. We've identified our area of manipulation. Now we're expecting our distribution phase inside of this breaker, right? So we come up, we close below it, we have a retracement, we touch that breaker, you sell that short, and then you take your normal targets, right? So that's how you would use a breaker in a power of 3 setup. Now, not only is that a power of 3 setup, but that is also a 2022 model, right? We have our sweep of a high time frame liquidity, displacement, return to a PD array, right? Fair value gap or order block. This is your order block. This is your type of order block, right? A breaker block. You sell that short, and you get that displacement lower, right? So if we annotate that like we're trading a 2022 model, this is what that would look like, right? We have our shift in market structure right here. We have our retracement. Breaker block is right here. You sell that short. There's your 2022 model utilizing a breaker block. Now we're looking at a market maker sell model, right? You can see it clear as day. We have the buy side curve here, and we're anticipating that sell side curve, right? So we have our initial consolidation, bullish reaccumulation, and then our second stage reaccumulation resting right here, right? So if we play this out, we can expect this high to be ran. And now what do we have? We have a high, a low, and a higher high. So now we're going to be looking for displacement lower through that high. We got it right here. So now we're looking at the range's lowest down close candle, right? You might be looking at this one, but this low is lower than that low, right? So we're going to be using this, the range's lowest down closed candle. What do we have with it? We have a fair value gap. So now we have an entry idea. So when are we going to sell this for the sell side curve? Well, once this breaker touches this fair value gap in price is when we're going to short it. You see we're touching that fair value gap now, but I want to wait until we get to that breaker. And right there is your sell opportunity. Now this is where you sell it short. You have your breaker block right here. You have your fair value gap confluence. Price intersects with both of these. You sell that short. Your stop loss would simply be above the breaker, right? Take your stop loss, drag it up there. And you know how market maker models work. What do you target? The initial consolidation or the market maker terminus, right? We play this out and immediately it gets straight to our objective. There are plenty of ways to utilize breakers in your trading. And like I said, when we're in these high time frame consolidations, they are extraordinarily useful, right? So we're going to go back to our chart right now. We're going to be looking through each individual breaker that we have in this consolidation. And I'm going to show you exactly what I mean by how important these breakers are in consolidations. You can see it right here. High, low, higher, high, right? We have our bearish breaker right here. We hit our breaker. What do we run through? We run through our sell side liquidity resting here, right? High, low, higher high. This high is broken. Is there a fair value gap? Yes. Is there a breaker? Yes. Let's draw these out. Price returns. Inside of this fair value gap, we touch this breaker and we get displacement higher. Now if we just continue to our left, what do we have here? High, low, higher high. That's a breaker. We're going to extend that out, right? We touch the breaker. What do we start trading to? Sell side liquidity, resting right here. Now I recommend going back in your charts, labeling these breakers and kind of back testing along with your strategy, whether you trade power of 3, whether you trade market maker models, 2022 models, silver bullets, whatever it may be. I really suggest going into your charts, back testing, and seeing how a breaker could help improve your bias or your intraday trading. But that's all for now. Until next time, stay safe.